Hey all, welcome back. Hope you guys enjoyed the weekend, and I know a lot of people are panic and not sure what to do now. Market is falling like anything. So this video is totally for to give a clarity on how is our market right now and what is the current status of our market and what can be expected from here and what to do right now and how to react for the current market scenario. So these are the points I'm going to cover. The first thing is I would say that watch this entire video completely and try to understand what I'm trying to say here, and ultimately the stocks which I'm going to discuss in this one, if in case I discuss any stock, that is only for education purpose, just to give some kind of guidance for you to how to analyze and how to do things. So don't take it as a literal meaning of I'm recommending or anything on that one, and hope you get the clarity. So let's get into the video, and this is Sundar and you are watching Mindful Finance. So as I mentioned, so today I'm going to detail it out what is the current scenario of our market and what to be expected. So before that, I just want to give you some kind of clarity that don't get panic. Okay, that is the first thing is if you are very clear about what you are doing, you don't need to panic. If you have made a mistake, just feel that just exit with whatever the loss you have, book the loss, and please exit from the market. Okay, don't be in the market so that you will get more hurt if it fall from here further. Rather than that, best thing is exit from the market or understand that the basics of market. Try to learn from what the mistakes you have made and think about how to solve and grow from here, because market is something, it's a big ocean. Okay, you are just part of it, and if you jump into the ocean, you're gone. But if you know how to sail through the turbulence, then you can win. So think about that. I don't want to give more gyan over here. Let's get into the current scenario and explain you what is our current market status, whether our market is bad right now or is a good. Let's get the details. Okay, so this is the site which I'm going to use for the entire thing. This is called Screener. First thing I'm going to show is our Nifty 50. Okay, Nifty 50. If you see the Nifty 50, you can see for the last 10 years, it is growing like this, and then now it is slowly, the angle is little bit, you can see how the angle is from the horizontal, the angle is switching. So normally, this is the area when the market was trying to consolidate. Okay, if I go for a maximum, okay, if you see, it is like this, horizontal, right? And now it looks like it's little bit taking an angle. Okay, normally all the growth markets follow this kind of a pattern. Okay, but ultimately, this kind of a pattern is what you will end up. You will not see a vertical thing. Even though if a market try to goes in the vertical thing, it will come back and try to follow the trajectory. Okay, so now if you see it's been a very high. If we go for 10 years, you see how it is right now. So this is an angle, but if you see it came down and again the angle is here, again it's coming down. So slowly the angles are coming down and it's getting the normal angle. Okay, so don't panic about this thing, and I'll give you a rough idea about how our market performance and how our valuation of our market is. If you see the PE for our Nifty 50, if you just check at this one, you see for the last 10 years, our median PE is 23.5. Now the current situation, the PE is around 21.6, okay, which is below our median PE. So which is a very good sign. If you see the time when the COVID drop, which was 19.7, and it went till 36 or 40. So that's how its correction happened. This is called, see, normally if you put a ball from the high, what happens? It slowly bounced, right? See, that is what you can see currently. Okay, ultimately the PE will settle down. Okay, and then there will be a momentum starts. So right now, if you see PE wise, our market is doing very good, and I don't feel it is overvalued. Okay, from the Nifty 50, what you can do is see in the screener, when you search for Nifty 50, you get all the 50 stocks over here, 50 companies over here. You sort by if it's a banking sector, look for its book value. Other sectors, you look for a PE. So let's start with the PE. Okay, sort it by PE, like low to high. So if you see Coal India PE is 7, industry PE is 18.96. Okay, then go and look at the Coal India chart right now. See how it has fallen, how much percentage it has fallen, right? Analyze this one and understand why it is. Look at the PE chart. If you see the PE chart, see it is less than the average. 8.1 is the average, and it is trading at 7.0. So it's lesser than its own median PE. Okay. So likewise, you go through all the companies which in the Nifty 50, and if you want to really want to learn more, try to understand their fundamentals and what is the problem. Is it really any problem over there? Try to analyze and find out whether it's a good stock to buy at this point of time. So start with PE, okay, and then for financial sectors, go with PB, and then check for debt, how much debt the company is having, and what is the last 5 years revenue growth. For example, if I go, okay, let's take Tata Motors. Okay, if you see Tata Motors PE, see it is below its own average. Median PE is 18.1 for Tata Motors, but it is trading below that one. And if you go and check its sales volume and other things, you see for the every year, this is the sales area. Sales is, if you see, there's a down, there's a reduction of sales. If you see, sales is gone down. Okay, and operating profit, see right now it is showing low. In the last year it was a bit high, but now it is low. So something is going on with their operating profit and the sales volume is reducing. Check why the reduction in sales volume. If you go and check even in this chart, we go sales and margin for the past 10 years. If you see, sales has reduced. Okay, and operating profit margin, you see, it's almost like went down and it is a little bit struggling between the same area. Okay, and net profit margin, so green one, if you see, it's very low. Okay, check why, what is the reason behind that. Understand the fundamentals. Okay, and the main thing is check for it, the balance sheet, like cash flow, whether they have positive cash flow or negative cash flow. Net cash flow shows positive, which is a good sign because they're having a cash in their hand. So what they are going to do with this cash now, right? And shareholders pattern, is there any kind of a change in the shareholders pattern? If you see promoters, there is a reduction in promoters, right? Some percentage has reduced. Then FIAs has increased, DAS has increased. So it's a good sign. Okay, promoters selling is fine. Like still 40% promoter holding is fine. Okay, if it is reduces further, you have to think about that. But in the normal scenario, promoters sometimes they sell their stakes, they they try to dilute their stocks. All those things happens. Okay, but overall, if you see, FIAs and DAS are increasing the thing. So that was Tata Motors seems a good bet, right? So likewise, go through the stocks within the Nifty 50 and put it in a Excel sheet, put it in a tracker, and find out and put a column on what is the reason why the stock is down and what is the current scenario and when you can enter. Put all your thought process in the Excel sheet and try to understand that. So similarly, so for my knowledge, so if you see, Nifty PE is very low. It is in a good right now. It is in a good position. Even if I go for 5 year or 3 year, right? So it's down. Maybe you can expect further correction or something. It may go till 221, then it will become attractive. Okay, but we cannot expect or wait for something, right? So slowly try to accumulate Nifty Bs or a index fund or something like that. Okay, so that way right time is the right time. So people are right now feeling that when to enter. There are new investors in the market. They will be thinking, is it right time to enter? That might be the market. Earlier it was market as all-time high. In my previous video also I have explained the mental behavior, right? So when the market goes down, then only people will try to find out, okay, this much percentage has down, and if I invest over here, there's a chance this may go back to this many percentage again, so that they can plan their investments. So market will always do like this. It will not keep going always in one direction, so that it will give opportunities for all types of traders. So similarly, let's check Nifty Bank. If you see Nifty Bank for the last 10 year, P for the bank is, see how low it is. It's bad. Our Indian bank stocks are trading like in a very low price. Okay, if I even go and check my price to book, that is also low, almost like 2.2. So COVID fall, it went at 1.8, but it is after the COVID, see, still it is lower than, it's the lowest the past 2-3 years, right? So PB wise, it is good. Similarly, analyze here also. This is the PB value. Check this one, like which one is a good PB right now. See, it is a Canara Bank is less than 1. Punjab National Bank is less than 1. Bank of Baroda almost like 1. So analyze these companies, these banks, and find out how the prices are, whether it is attractive at this point of time. Is there any concern over there, right? So think about that, and then you can improvise your learning. So for my knowledge, Bank Nifty is trading at very cheaper. Our banking stocks are you are getting at very cheap price right now. Okay, so let's see, next one is Nifty Pharma. Let's check Nifty Pharma. So Nifty Pharma, if you see Nifty Pharma is something is called as a defensive sectors. Okay, you see the Nifty Pharma always it is trading at this particular PE and it is always around that one. It doesn't go high or low. So always Nifty Pharma is attractive. But point here is you need to find which stock to pick at what time, because there are different multiple stocks are there in Nifty Pharma. You see currently if you see Natco Pharma is lesser than industry PE 12.3 12.6. Dr. Reddy is trading cheaper. Aravinda Pharma is trading cheaper. Zydus Life Science is trading cheaper. Cipla is cheaper. Granules is cheaper. Biocon cheaper. See till here, right? What is the Sun Pharma also is higher. Okay, here till Alchem Lab it's cheaper, but all others are expensive. Divis Lab is very expensive, right? So using this, analyze your company's Nifty Pharma, because Nifty Pharma also has fallen a lot, right? PE has reduced a lot in Nifty Pharma. So bet for that one. Then another thing is Nifty FMCG. If you see the Nifty FMCG, so it has also Nifty FMCG has also fallen a lot. You look at the PE is still it's higher. Okay, so there's a chance that FMCG sector may fall further. Okay, or correct something. It's more than maybe in a sideways, or it right now you may not find a momentum in FMCG sectors. So in that case, you have to again check the FMCG stock. You find out which one is currently trading at a lower price. But if you see only ITC is trading lesser than industry PE. Okay, all are expensive. Nothing is at a good price. So obviously people will not tend to invest in FMCG sector. They'll wait for some correction. So that is what the chart is telling. So currently only ITC is trading at a lesser valuation. But overall, if you see, it is also correcting. Okay, it has to come down further. Okay, so it may take some. So FMCG will take time. Now you check for auto. If you check auto for last 10 years, if I see the auto is trading lesser than PE for a very long time. This entire year from still since November 22, okay, is trading at a very decent PE. Median PE is 35.8, but it's trading at 22.3. So lesser than the average PE. So that means in auto sector you have very good potential to grow. Okay, check the stocks here. If we go for a PE, see Tata Motors, we already discussed in Nifty 50, it's trading very cheaper. Apollo Tyres is trading cheaper. Hero MotoCorp is trading cheaper. Suzuki is almost like yes. So only these three stocks are currently in a good position right now. All are expensive. It's not highly expensive. You see, it's almost trading close to the industry PE. But better than that, we will find companies which are getting more cheaper, right? So try to explore these three companies right now. Okay, and then let's see Nifty Metal. Oh man, see, look at Nifty Metal. Okay, still Nifty Metal has to fall. Okay, still it is not touching its median PE. It may consolidate again. So Nifty Metal sectors, you have to be cautious. If I check at industries, NMDC, Hindalco, National Aluminium, SAIL, Welspun. So these are like trading lesser than industry PE. Okay, you can check these companies for metal. If you still want to invest in diversify your portfolio and invest in metal, so focus on this one. The other one is Nifty IT. Nifty IT is trading very high. So right now, it's not the right time to invest in IT because it's trading at way high. Okay, so don't focus on IT. It's already it is an uptrend. Okay, don't try to chase when it is an uptrend. Like find out the time when it is fall by certain percentage. So we should have accumulated here. This was a time I earlier also in my video I discussed to accumulate more. So this is the April 23 or the time we should have accumulated. If you see the PE at that point of time, see it was a good time should have accumulated there. Even in my New Year video I posted about this one. Anyways, so IT sector right now it's not the right time. Then let's check for Nifty Infrastructure. So it is trading little bit higher than the median PE. Nifty Infra also little bit higher. It has fallen little bit. It may fall further. Okay, we can expect more little bit fall from here. Let's see for 1 year. Yeah, see it fell here 23.2. It has to fall till here so that it is a good time. But this was the time when it is June 24 was the right time. Price wise also June 24, and it is trying to touch that one. If you see there is an distribution. This is called distribution phase. It was clearly in distribution phase and it is going down. So it may go further down also. Let's check the. So if I go and check Nifty Infra, if you see it is making a distribution channel. Okay, so there is a chance that it may fall further. Okay, it may fall further down till here. So be cautious about our infra stocks. Okay, it may fall further another 8%. There's a chance. If it is recover, it is recover, but not sure. Okay, we cannot tell about this one. But it is at support level. Anything can happen. If it falls further till here, the price will be attractive, and there will be more investors will come into the picture. So hope you guys got the clarity right now. You understood which sectors are doing good and bad, and make sure to do a thorough analysis from your side. Okay, so right now the way we discuss, go and do yourself those kind of analysis. So for me, it looks everything like banking sector is completely like it's getting very cheaper price. Nifty also is trading very cheap. Pharma is almost like as a defensive stock, it's okay. But currently, banking sector is trading at dead cheap price. So just focus on whichever stocks you are comfortable and try to hold this thing and put it in a watch list. And main thing is create a Excel sheet and analyze all the stock and put a comment over there and find out when to enter. You yourself put a target. Okay, this is the right price for me to buy. All those things enter over there and follow that. And don't try to invest in a bulk. Go in a chunk of investments and have a liquid right now. That's the best option. Slowly you can accumulate it. Hope you like this video. If you like, do subscribe to video, like this video, share it with your friends and family, and don't forget to press the notification icon. Thank you.